This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. Today on the show, I have Harry Dent. And Harry is a well-known name, and his business has been primarily about looking at demographic trends, consumer spending, and trying to say where economies, markets, countries will go in the future. So forecasting what might happen in the future using that type of fundamental information. And I'm sure there's a lot of different other things that he uses, different cycles and whatnot. There's a lot of detail there. However, clearly, for people to listen to my podcast and know my work, it's a slightly different take. That said, I think you will enjoy this. This is a fun conversation, and I think for people that it's really not a trading conversation. It's more Harry and I walking through what's been happening the last 15 or 20 years, the idea of no interest rates, the idea of saving banks, the idea of propping up real estate, the idea of QE, Fed actions, stock market rigging. Now, of course, all of that is just viewpoints and opinions, and somebody could say, well, it's all irrelevant. Well, you know what? I think it is relevant in forming a good society. I don't think it's good that society should have open stealing. And that's my opinion. So anyways, I hope you enjoyed this. This, once again, is a conversation with Harry Dent. Enjoy. Hey, Harry, this is Mike Covel. How are you?
Good. You can hear me?
I can hear you good.
Okay, great.
Where are you at today?
I'm in Tampa, Florida.
Tampa? Well, I'm in...
And you're in Asia?
I'm in Saigon.
Saigon, okay.
Yeah. So let me tell you how I came to call you. It must be either a subscriber or someone who's really fond of your work, and he likes my interviews, and he said, well, you got to get Harry on. And, we probably come at situations a little bit different in our work, but I want to give you a chance today, just kind of outline from the ground up how you approach things. And we can jump right in because I know a lot of your work is based on demographics, and you start by looking at the demographics and consumer spending, and your thoughts about what might happen in the future starts there. Am I laying that foundation correctly?
Yeah. We look at cycles and a lot of other things, technology and stuff. But yeah, our primary premise is consumers drive our economies and developed countries, and they do predictable things as they age, entering the workforce, getting married, raising kids, buying houses, spending money, borrowing money, and then as they get older, saving and investing more. So kind of cradle to grave, we can predict what people are going to do. And particularly, the big thing for the economy, the macro number is age 46. At least in the United States, that's the peak in spending of the average family. There's kind of a plateau between 39 when people are getting their largest home and 53 when they're spending the most money on cars before they really drop off. I think the thing that people don't realize, people drop off in spending dramatically after their early 50s because, the kids are out of college or school, they don't drive their car as much anymore. So now they buy a car every 10 years instead of every 4 years. And, they're downsizing housing, paying down debt, saving for retirement. And so you got what we have is the Western world and the developed world, Europe, North America, East Asia, which includes Japan, Singapore, Taiwan, and South Korea. They're all kind of peaking at different times in their baby boom generation spending. And then they're going to slow down, just like Japan was the first in the 90s. I call it the demographic cliff. That's going to be the title of my next book coming out in January, because it's happening in different countries and regions at different times. Japan peaked. They didn't have a baby boom after World War II like the rest of the world, Europe and the United States. So they peaked in the early to mid 90s. and then have been in a coma economy ever since. I mean, endless quantitative easing, but they grow at about zero, and their inflation's been about zero. They basically just been in a coma. Now the United States kind of peaked in 2007, something we predicted 20 years ago. And frankly, that I'll show you how simple it is, Mike. If you take the rise in the baby boom birth index, which really started after bottoming in 1934 to 36, and 1937 was the first real rise in births, and then that rise continued until 1961 before falling off. Well, if you just lag that birth index 46 years for the peak in spending of the average person or average household, that gives you a growing boom in the economy from 1983 to 2007, which is exactly what happened. Now, other things happened too, but we said 20 years ago, around 2007, maybe 2009 at the latest, the U.S. economy was going to peak and then slow down until 2020 to 23, until the next generation got into its spending cycle, and the next generation is not as large.
Harry, let me interject right there, because I think that's exactly a good example to lead with. I'm in my early 40s, and I always tell people, and I'm not in the business of trying to forecast what all this means, but clearly, while some forecasts related to demographics might not exactly mimic what might happen in the markets, we know these things are in place. So, for example, if I'm in my early 40s, am I not mistaken that the baby boom generation is about twice the size of my group? It's something significant, isn't it? It's not. I mean, my group is significantly smaller than the baby boom group. And I always say, who in my group is going to buy all their houses, buy all their stocks, and buy everything from them?
Yeah, I call it Die-ers versus buyers. Real estate's unique because it lasts forever, unlike food or even automobiles. So when people die, you are freeing up a home that goes back on the market, supply. And if there's more people dying than young people buying, which will happen at a point in many countries, then we won't need more housing. And like you say, who's going to buy the baby boom's homes from them, especially the large McMansions, which the young generation won't want for a while. The echo boomers are going to they want apartments now. They're going to want starter homes in the next decade. But it's going to be a long time before they want, like a 4,000 to 5,000 square foot home on a golf course. So those homes are really going to be bad. And I think the best way to put it is, as a wave of people, yes, the baby boom's like twice the size of the echo boom. As numbers of people, the baby boom is a little larger. But the echo boom started from higher births, but they never, when we include in immigrants, which I can do with a computer model, I can determine when they were born on average, the people who immigrated here, legal and illegal. The echo boom never gets quite as large as the baby boom. And in countries like Japan, nowhere near as large. And in Europe, most countries don't even have an echo baby boom, except for the Northern European countries. The Southern European and Central European countries, including Germany, Austria, and Switzerland, don't even have an echo boom. So there is no generation to follow. So that's the theme of the new book, The Demographic Cliff. What happens when a smaller generation follows a larger one? And the biggest impact is just what you said on real estate. Who's going to buy the baby boom's home? And why would we need to build new homes in most of Europe, Japan, the United States, countries like that, or even Korea? Why would we need to build new homes except in a few areas where people might be migrating to because of climate or jobs? Or
you bring up an issue though too, and I saw this in a piece of research that I think it was Barry Ritholtz did, that the numbers, and we're talking millions, the numbers of homes that are being kept off the market because they're owned by the banks. I mean, who has any earthly idea what the real estate market even is in the United States of America anymore?
Yeah, and who has any idea what the economy is? Because not only are banks holding back foreclosures, why? Because they think the government's going to turn around the economy. They think home prices are going to come back and they can sell these later without taking a big loss. If they sold them now, they'd take big losses. Their reserves would be used up. They'd be in trouble. Some of them would be bankrupt. So the whole economy is artificial. Companies are 40% of the earnings on the S&P 500 have been from buybacks of stock because companies can borrow money at 1 or 2% and buy back their stock and it's profitable. The economy's growing at 2% on average when it would be in a deep recession if we didn't have $1 trillion in quantitative easing every year and about $1 trillion in fiscal deficits. You got $2 trillion a year in fiscal and monetary stimulus that's only creating $350 billion or 2% growth in GDP. So, $2 trillion a year to create $350 billion in GDP. Who would make that investment? Who would make that trade-off except for governments that can create money out of nothing? So the whole economy is artificial. The recovery is artificial. The stock market, more than doubling is artificial. Bond rates have been lower than inflation up until recently. That's artificial. Housing prices are artificial. Yeah, because 3.5 million homes, it used to be 5.5, but 3.5 million homes are shadow inventory sitting there held by the banks. And if they got dumped on the market, housing prices would plummet.
I was going to say, when you say the stock prices and the real estate prices are artificial, I know where you're going with that. But to the person that owns those assets and sells them today, they might get full value. I think what you're really mapping out is the hidden risk of who's holding the hot potato at the last point in time when the blank hits the fan. I think that's what you're really saying.
Yeah, that's right. When the music stops, And that's exactly what we're telling people. I'm timing this book to come out in January because I think that we're, not very far from a top. I don't think the stock market has quite topped yet, but I think it's going to top in the next 3 to 6 months.
Let me change the subject slightly on you. I want to, because I think you can probably outline this in a way that the average person can understand. And I say the average person, that could be a 26-year-old recent college grad. That could be a 50-year-old attorney. I think the vast majority of people do not understand the concept of zero interest rate policy. And they know that if they once used to get income on cash they had in the bank, they know that's gone. But I think they're just afraid to say anything because they've seen the stock market go back up. And I think they're not really catching on that those two things are related, that they took your interest income away from you. And that was done to push asset prices up because then there was nowhere left to put the cash except assets because you got no interest. Why don't you kind of walk that through in baby steps for this idea of zero interest rate policy and what's been done and how detrimental this is?
Yeah, it's rigging the economy. It's rigging asset prices. It is pushing them up because that's all the government can do. We had this bubble boom from 1983 to 2007. Stocks got overvalued, housing, the biggest real estate bubble around the world in modern history, going back hundreds of years. Greatest debt bubble in history. Debt in the United States grew at 2.7 times GDP. From 1983 to 2008. So debt bubble, financial asset bubble, everything got overdone. Everybody overexpanded. Businesses overexpanded. Households overbought cars and houses and everything and got too much in debt. So you can't get people to borrow more. You can't get people to spend more substantially. So what do? You push up asset prices. Why have we not gotten inflation after $10 trillion of money printing around the world? It's because the money's not going for the money to cause inflation. It's got to go into the banking system, be lent, and then be spent by businesses and consumers. That's not what's happening. It's just going into speculation. Banks use this free money from governments that they inject in, first to increase their reserves so they don't fall flat on their faces and go bankrupt, which they should have done after so many bad loans. And if they had gone under, a lot of consumers and businesses would have gotten massive mortgage and debt relief, which would have been positive cash flow. But no, the government can't let the banks fail. The government can't let the economy fail. So they push interest rates to zero. They push trillions of dollars in the economy just to basically you're keeping the bubble going. Now, why would you want to keep the biggest bubble in history going? Just because you don't want to detox and come down off the high, because it's going to be painful, just like the 1930s. Debt bubbles have always, and financial asset bubbles have always been followed by deflation or depressions. The 1930s, the 1870s, the 1830s and 40s saw this, and they all followed major debt bubbles, but nothing as large as this and nothing as global as this. So it would have been painful. We would have had a Great Depression in the last few years. And frankly, we would have been coming out of it by now. We would have cleaned out $20 trillion in debt in the United States. We'd be a whole different country. But they stopped this from happening. And then the consequence, like you said, is people get no return on their savings, and they get pushed into riskier assets. So commodities go up, gold goes up, stocks go up, real estate goes up, which means they're all going to crash again.
Well, it's funny. This spring, I noticed that J.P. Morgan made money 63 out of 63 trading days. And instead of that being the lead story on the front page of the Washington Post, where people say, how did this happen? This seems unusual. People just cheer it and go, oh my gosh, they're such smart guys. They made money 63 out of 63 days, when all they're doing is taking free money from the Fed and loaning it out on credit cards and taking the spread. It's not hard to make money every day doing that, is it?
Yeah. Or a lot of these banks and investment banks and financial institutions, after they cover their reserves or whatever they do in their business, they speculate often in high leverage and play a rigged market. The government is pushing the market up. These companies take money, leverage it 30-1, buy bonds, or buy stocks or something, or gold, and then just, get almost free profits from free money. So, the government's keeping the bubble going. Who did the bubble benefit? The top 1% of households, the entrepreneurs, the people who own business, the financiers, Wall Street, and who owns all the financial assets, the top 1 to 10%. So these people are doing better than ever. Polls show that 20% of households say the economy's better than ever, and they're college educated, own all the financial assets, benefiting from the bubble. 80% say we never came out of the Great Recession or Great Depression. Those are everyday households whose median earnings have been going down since 2000 and who don't own much stocks and aren't benefiting from the bubble, and their house is still underwater in many cases.
It's mind-numbing. And let me ask you this, though. So you could imagine, though, a situation where, look, if we've seen this with zero interest rate policy and all the various QEs, I mean, for all we know, couldn't the government just keep levitating this for, how long can it go? They could conceivably levitate it for another decade, couldn't they?
Well, yes and no. Japan has done this. Their first crash, they didn't do QE in the early 90s, but their second crash from 97 on, they've been doing QE now for a decade and a half or more. And they haven't done it quite as strong as us, but they've done it forever. But the difference is Japan had their downturn when the rest of the world was booming. Japan had their kind of deflation when there was mild inflation around the world. Everything kind of offset. Japan had surpluses in trade and surplus budgets before they came into this. Europe and the United States came in with budget deficits, trade deficits in many cases, and the whole world is going down together. Even China is slowing. Emerging markets are slowing because commodity prices are falling, something we predicted a long time ago as well. That's a 30-year cycle that's pretty predictable. So I think it's harder when everybody's going down and to do this. But the truth is, yes, governments are doing it to levels I would have never. We knew there'd be stimulus. When I came out with the book, The Great Depression Ahead in 2008, we knew we'd have a downturn. We knew there'd be stimulus, but I had no idea there'd be stimulus on this level. And central bankers just would say, like Mario Draghi, whatever it takes, we'll do anything. Trillions and trillions of dollars. This is the most irresponsible, stupidest thing I've ever seen. It's killing the golden goose. This is how you kill the free market capitalist system. Rig the market so they can't rebalance themselves. We can't deleverage debt. You can't, bring financial assets down for the next generation so they can afford to live in a house, afford to buy stocks again for retirement. This whole system is perverted just to keep the bubble going and just so nobody has to have egg on their face, the banks and the government and the central banks. This is crazy.
I'll give you a kind of a personal example that I gave on a podcast recently. My grandparents were in their late 70s, in the mid 1990s. And my grandfather got Alzheimer's. Now, my grandmother is still alive today, her late 90s, but, my grandfather had assembled some wealth. And I think at the point in time, I think his muni bond portfolio he assembled was generating I think it was a little less than 7% on the whole portfolio. Today, though, that's just impossible. And I think the dirty little secret, what's really going on is it's the forced spending of principal. It's forcing people to spend down their principal. And in many ways, I would just say that's a form of saying we are going to take, it's a form of taxation in a way. We're going to take money from you in a kind of a subversive way to force you to spend money because you no longer have the interest income that you thought you should have had by saving all those decades like you were told to do. Now, no more interest income. Now you're going to spend your principal down to zero. I mean, we're facing a lot of that, aren't we?
Yeah, no, it is a tax. And it's particularly a tax on the average person. Yeah, you either have to get very low returns and spend down your principal, or you have to move into riskier assets. And it's for the everyday person to move into stocks and commodities and gold and riskier assets, you're just going to lose your ass. You're going to take risk, and the next bubble is going to burst. So the government is borrowing from people, and by creating this money and buying their own bonds with this money and having financial institutions buy their bonds, they're pushing interest rates low, which allows them to borrow money and run deficits without as much consequences. This is basically as close to a crime as you can call it, and yet you've got most economists saying, oh, the Fed's doing the right thing. Even one guy I interviewed on CNBC, Ron Insana, said, this is enlightened Fed policy. This is not enlightened Fed policy. This is not going to go down well in history. And I think in the next year, we're going to see another crash start that's bigger than 2008.
Harry, can I ask you kind of an interesting thought that I'm having here? Have we lost the ability to even have a conversation about the morals of any of this? I mean, it really is a stealing aspect in my mind. And it's like it used to grow up thinking, you don't go into the store and steal a candy bar. You don't do this. But now Goldman Sachs, JP Morgan, Morgan Stanley, stealing has become in vogue, and it's kind of crazy.
Warren Buffett says it's okay. Somebody drugged this poor guy, and they stick him out there like a puppet and say, Warren, we're going to give you all these great deals where you're guaranteed to make money by us. Can you go out there and just tell the American public everything's okay so we can keep doing this? This I have never seen anything. I go on CNBC and people say, you're crazy. And I'm like, no, you're crazy. We are in bubble land. We're addicted to debt, addicted to this bubble, and we're in total denial about it. And like you say, you bring it up and people say, you're crazy. I say there's going to be another stock crash. And they're like, that can't happen. I'm like, how many bubbles we've seen burst? 87, 2000, 2002, bigger bubble burst. 2007 to 8, 9, another bigger bubble and burst. Why would you expect anything else? The Fed's been goosing this thing. We've been borrowing money at rapid rates since 1983, one bubble after the next, one bubble burst after the next, and you can't even talk about the possibility of another bubble burst. We can't do this. We're in denial. Don't bring this up. It's the damnedest thing I've ever seen. It scares me. It makes me want to move to Asia.
Well, it is. And look. And we could have reasonable disagreements on what the trading strategy. I'm sorry, I can't even talk right now. What the trading strategy should be. However, I think what people should be hearing in what you and I are saying is, gosh, just open your eyes and look at this and just scratch your head and say, why are we just trusting this system, this boom bust system? And I've gave a bunch of speeches this spring, and I would talk to these Asian audiences, and they weren't very interested in what I was saying until I would look out the window and I would say, you know what? There's a black swan circling out there. I can't tell you when exactly it's going to land, but we know it's coming. And what are you prepared for the next swan to land? And I agree with you completely on this. It's bubble build, bubble pop, bubble build, bubble pop. That's where we're at right now.
Yeah, and all we have to do is the system is so stretched. Now we have even more debt than when this last bubble burst in 2008. The U.S. has deleveraged a little bit of private debt, but they've added more government debt. Japan's adding government debt at the speed of light. And everybody, the other thing to look out the window in any major city, look at the next tallest building in history going up in your city. That's another sign of a bubble peaking. All we need is something to trigger it. In 2008, it was the subprime crisis in the United States. And think about that, Mike. 4 states really dominated that subprime crisis. 4 states brought down the world. Why? Because the system was so stretched with debt, so stretched with leverage. All it takes is something to pop the balloon, and then the whole damn thing goes down around the world. So all it's going to take is one country leaving the euro, or China's real estate bubble to finally start to burst and get out of control. And they're losing control over their private debt there. So I think that's not far away. The United States, the rebound in housing to collapse because it's almost all speculators. It's not real people buying homes with real mortgages. It's speculators because all this money's got to go somewhere, and, gold's now falling and commodities are falling and stocks are getting pricey. So people are going into real estate speculation again. Same thing that caused the problem. So all it takes is one thing to go wrong. And to me, the whole system comes down and you got crash number 4 from 2014 to 15.
How do we lose direction on the idea of resets? Because you mentioned it earlier, the idea of resetting after the fall of '08. In the fall of '08, if Warren Buffett had not stepped up to the plate and made the big announcement how he's buying Goldman Sachs and I think it was Bank of America, whatever he was all these things, and and then all the intervention that went on, it seems like yes, the markets might have collapsed. Maybe the Dow would still be below 10,000 today, but we'd be so much healthier, and so much that expectation that government can save everything would have forever been gone. And psychologically, people would have been forced to say, you know what? The game's over. I got to pull my bootstraps up. I got to go back to work just like the old days. And instead, they've just they've prolonged the very people that are believing in all of this will be the very people when the next black swan lands that get burned.
Yeah, they get burned, and you by putting off a crisis, you make it worse, just like anything else. It's just like, okay, I got a drug problem, but darn, I don't want to go through detox for 3 or 4 weeks and scream and puke and all this stuff, so I'll just keep taking more of the drug. Well, when you finally do go down the road, you're only going to be worse off. So we're going to have a worse crisis down the road. I think in the next 3 to 6 years, you're going to see a Great Depression around the world because we weren't willing to take our medicine. You're right. If we'd have let this thing happen, in my estimate, is out of $42 trillion in private debt that basically doubled in 8 years. We would have eliminated $20 trillion of that debt for businesses and consumers, which would have increased our cash flow. Businesses would have had to consolidate, get more efficient. Banks would have had to consolidate as they're writing down all these loans. We would be much stronger, much leaner and meaner. And yeah, we would have gotten our ass kicked for about 3 years like we did from 1930 to 33. But we came screaming out of that downturn, and the U.S. became the greatest country in history after World War II and the Great Depression, but partly because we got such an efficiency hit and such a shock to the economy that actually worked for high productivity and growth in the long term. So yeah, we're basically going to end up in a greater crisis and or at best, which is the worst to me, end up in a coma economy like Japan where we just don't grow or slow because the government keeps you in the emergency room on life support just enough to barely be alive but not to come out of the coma. That's what Japan's been. 23 years now of pretty much zero growth, stocks down, they bounce and they go down. Real estate's never rebounded 22 years after its top. I mean, what does that tell you? Die-ers versus buyers and government stimulus that just keeps the economy at zero. That's what we got. We either have a much worse crisis or a coma economy forever. That's the two choices.
Well, I don't know, but I do agree with you big time that we are in the process of creating bubbles, and we've surely seen 50% downturns on the S&P in the last 13 years. We've seen the NASDAQ go down 77%, and I surely think those kinds of drops are certainly possible again and probable. I mean, that's the cycle we're in. We're in this boom bust cycle. And the question just becomes is really the timing of it all.
Yeah, it does become the time. You're right. And you keep having this bubble burst until you finally deflate the bubble. And the only way you can deflate the bubble is to deflate the monetary system, deflate the debt that drove it. All these assets have gone to extreme levels and the economy's grown faster than it should have simply because of excessive debt. So you got to wash the debt out of the system. That's what happened in the 1930s. Everybody said it was the worst thing and the Fed screwed up and the government screwed up and everybody screwed up. No, we went from 190% debt ratios in the United States, total debt, government and private, to 50% in 3 years, a huge washout of debt. And that's what allowed the economy to be efficient and grow again. So nobody wants the banks to fail. I'm like, let the damn things fail, get it over with. Only assist. My role would be, okay, you don't have to do a cold turkey detox like the 1930s totally. Government, instead of giving free money to banks to speculate and to waste and to do all types of stupid things. Only give partial assistance to banks who actually write down loans for consumers and businesses, mark mortgages down to market, force them to market, and then say maybe, hey, for every dollar you lose as a bank, the government will take 25 cents on it just to give you some assistance so the whole banking system doesn't totally melt down like the 30s. But you still have to restructure this debt. You've got to have banks fail. You got to have companies fail. We launched every company in history in the bubble boom. Now we got to shake down like the 1930s to the efficient people. I mean, car companies went from like 30 to 4 or 5, in that shakeout in the 1930s. And it just made the survivors bigger, stronger, more efficient. And they brought more cars at lower prices to consumers in the boom to follow. So that we need this, what I call winter season. We need this detox. We need this efficiency push after a glorious bubble boom that kind of overdid everything. And if we don't do it, we just end up, like you say, we're going to keep bubbling and bursting. And like Japan, you keep recovering and then bursting again. And Japan never wiped out their debt. So they haven't come out of their coma economy and they keep bubbling and bursting. So that's what we have to look for. We should just do this and get it over with.
Well, I'll be even more alarming than maybe some of the things you're saying. I'm starting to think that the cake is baked and, there really is no hope of these things, that the interests that control the machinery, the system, and that whether it's the government, the banks, and the media machine that just spins all day long to people, hey, everything's okay, the Fed has saved you. I just don't know if this Leviathan, that this beast can be slayed. I think they run the show, and perhaps they'll just have the boom bust cycle that just slowly takes the Dow down to wherever its final resting place is. But I really wonder if there's ever going to be a way that things are done normally and frankly morally again in America. I just don't know if I see it.
Well, that is a possibility, and that is what Japan has done. And Japan's stock market just slowly went down to an 82% drop, where it bottomed in late 2012. It kept going up and rallying, but then it kept falling to new lows, just like I'm saying happened. We could see that happen for the foreseeable future, and if that does happen, like I said, we stay in a coma economy. We keep, going into recession, and then there's more stimulus, and then we grow at 2% again, and then we collapse again. We never come out of this. We kill the golden goose. We slay the free market capitalist system, which has made the Western world so prosperous in the last century and more, since the Industrial Revolution, to go back farther. We just kill it. And we end up in a coma economy. And then you know what? The emerging country is going to take over the world, and we're just going to be old grannies sitting in the nursing home on life support. That's what we will get if we do this, because you will kill the golden goose.
As I sit in Saigon, and I think the vast majority of the 80 or 90 million people in Vietnam are below the age of 30, there's a certain amount of energy when you're around people that are all below the age of 30. It's not like, I own land in Vienna, Virginia, outside DC, and frankly, it feels like a geriatric community, even though it's super wealth and all that kind of stuff. And then you're around the younger people that are really kind of vivacious and whatnot. It's pretty easy to see how the demographics are going to shake out.
Yeah, no, it is. And Europe's even worse. You go over to Europe and Japan, both are basically nursing homes. People there want to retire at 50 or 60. They're like old people. They don't want to work. They're slow. They don't want to innovate. They don't want anything to change. They don't like new technologies. I used to lecture in Europe, and I just stopped. I said, I'm talking to the wrong people here. I'm talking about progress, new technologies, growth, all these things. This was back in the 90s when things looked better. And I'm like, these people don't like the internet. They don't want new technologies. They just want to grow their grapes, and eat their cheese. They're basically asleep. They're retired already. And that's what happens to older societies. So if we don't wake up, and the best way to wake up is to get your ass kicked. A crisis would wake us up. And the United States is not as old, is not aging as fast as Europe or Japan or East Asia. The United States is in a good position. So is Canada, Australia, Northern Europe, Scandinavia, England, France. These are the countries that have better demographics, not great like in the 80s, 90s, and 2000s, but we can grow again. But if we keep taking this monetary drug, we're just basically going to be in life support in the emergency room forever, and we're just going to slowly die.
One of the things we've not talked about tonight, and I'm going to let you run because I can't keep you all morning, even though we could clearly talk, we could keep talking for hours here, is that there's another issue going on in America that I see that's rather ominous, and I don't call it the difference between right and left politics. It's really the difference between those that ask the government for assistance and those that don't even think to ask the government for assistance. And I think the folks that ask the government for assistance, they kind of, I feel bad because they kind of have lost their way. I don't really think they want to be on the dole, so to speak. And when I say the dole, I'm not talking about any one ethnic group. I'm saying 50% of America is on the dole. Yeah. And that number's, people say, oh, you're making that up. You're being negative. You're being bitter. No. I'm just being rational. I'm saying this is crazy. It's crazy.
It is. It does make sense to have a safety net, a social safety net. But yeah, it shouldn't be permanent. It's the same thing with monetary policy. If you have a temporary crisis like Japan, the tidal wave hits the nuclear facility and blah, blah, blah. You don't want the whole system to melt down because of a temporary crisis. So you put liquidity in. But to keep pumping the economy with monetary policy, QE, for 5 years perverts the economy. To have people on the dole long term instead of short term when they have a setback or lose their job or have maybe a medical emergency, you just get people, like you say, who lose their way and who get addicted to this, and they just become used to it, and then the country becomes used to it. Next thing you know, half the people aren't working. And then next thing you know, half the people are dying or retiring early. I tell people right now, the reality is, the biggest reality that all developed countries have to get, we can't retire at age 62 to 65 or 50 to 55 in some countries. It's insane. Our life expectancy has gone up 20-some years in the last several decades, and we haven't adjusted our retirement and our entitlements for this. We should be retiring at age 75, not 65. And if we don't make this adjustment pretty quickly, all the baby boomers in the United States, for example, are going to be retired by 2025, and they're going to be locked into doing nothing for 23 years. That typical person who retires at age 63 today in the United States is going to live to be 85. 22 years of playing shuffleboard.
There's an issue in there, too, that we haven't discussed, which I think is also ominous, which is the idea of public employee pensions versus literally no pensions in the private sector. And frankly, that's the way the cookie crumbles, that there's no pensions in the private sector. But the fact that you can hear the idea of Detroit getting bailed out floated, and the only reason Detroit would be bailed out is to simply pay for public employee pensions is crazy. And that's also crazy because, what you're ultimately going to be down to in America is the private sector employee who is basically living on the same block with the public sector employee. The private sector employee will have no pension. He'll just have his investments, whatever those might be, when he retires. But his tax money will go every year to give his immediate next door neighbor, who just happened to decide to work for the police force or the fire department, a monthly stipend that goes on and on and on until he dies. And I don't really think the vast majority of private sector employees in America understand that bargain that's been made with public sector employees. I don't think because the public sector employees are kind of quiet about it. They know what a great deal it is. I mean, look, I grew up in the DC area. It's amazing. Everybody there has got a pension that goes on forever.
On a pension.
Yeah. So, I mean, I think that's another issue. And look, I get it.
Nobody wants to talk against policemen, firemen, and teachers. No. They're like these great people, but yeah, they are overpaid in the first place, and then they get these unbelievable pensions that would never be paid in the private sector. So, I mean, that's why you need a crisis. We won't admit any of this. We're in denial. We're in la-la land about all of this. It takes a crisis to get people down to reality. And if we have this crisis, people are going to realize we can't retire at 65. We can't pay excessive pensions, public or private. We can't we can't keep companies from going under because they're inefficient and they need to fail. We have to let banks fail. We have to write down loans. We have to get down to reality. This will all become clear. I used to be a turnaround manager early in my career in the 80s, first at Bain & Company for big companies, and then with smaller companies in California. And in a crisis, when I come in a company being a crisis, I could go in and change everything in a matter of weeks because people get real in a crisis. But when you're in la la land and the company's still sailing along, I'd be the consultant saying, hey, we've got an inefficiency here. We're going the wrong direction. Everybody be, no problem. We're doing okay. As soon as there's a crisis, man, everybody gets real. You can cut employees. You can change the company. You can do everything you need to do. We need a crisis because we are totally out of reality.
Yeah, I think that's probably a good place to end it. I frankly, I think crises are great, and they cleanse the system, and I thought the '08 one was going to cleanse, but they just resurrected it so fast.
Yeah.
I mean,
they just didn't let it happen.
I mean, it was so fast how they did it. It was amazing.
Stop the detox.
They really did. But hey, Harry, listen, this has been fun. I enjoyed speaking with you, and we had a pretty decent connection considering we're about 8,000 miles away. And I'd like to give one shout out to, like I said, one of your readers and followers, a guy named Clint Stevens, is. This was his idea to reach out to you. So I appreciate that, and appreciate you taking the time today. Hey, listen, what's the best place?
Real quick, Michael.
Sure.
We've got a free newsletter. You should get on this called Survive and Prosper. All you do is go to harrydent.com, and you can get this for free. It's a daily newsletter, great content. It's a way we allow people just to get to know us at their own leisure. And then we have other newsletters that are much more predictive and recommended. But this has got great content about current events and our long-term principles and how we look at the economy differently, technology cycles, debt cycles, demographic cycles from cradle to grave, and et cetera. So this is something for free that people can know a lot more what I'm thinking and keep up with us.
Well, you actually jumped the gun on me, because I was going to ask where was the best place to go find out more information about you, and what's the best website to go to. I think you actually can repeat that again, the best website to go to find out more information.
Yeah, www.harrydent.com.
Okay. Hey, have a good day in Tampa. It's morning time there for you, and getting late here for me. So hopefully we'll speak again in the future, Harry. And perhaps we'll speak again once one of these cathartic cleansing moments finally happens.
First quarter next year would be a great time to reconnect. I think you're going to see a crisis start somewhere in the first quarter, and we're going to be in a recession by the second quarter.
And just to clarify, not to gloat, but perhaps to offer people ideas on what to do next. So, yeah. Anyways, hey, Harry, take care, and good chatting with you.
Okay, thanks, Mike.
Take care. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.